Have you ever wondered how some people seem to make tons of money through trading or investing? Driving fancy cars like Bugattis or Lamborghinis. Flying in private jets. While you're still trying to figure out what these terms even mean. Don't worry, you're definitely not alone. Many people hear about the potential of the stock market, but get stuck not knowing whether they should be trading or investing, or what the real difference is between the two. In this video, I'll break down the key differences between trading and investing, helping you understand the pros and cons of each, so you can decide which path better suits your financial goals, risk tolerance, and lifestyle. Now, let's clear things up and dive into what trading and investing really mean. These two terms often get thrown around like they're the same thing, but they're actually very different approaches to building wealth. The main difference comes down to time. Now, I know that sounds like it could be as confusing as Einstein's theory of relativity, but trust me, it's not. It's actually super easy to understand. Let's break it down. Let's start with trading. Think of it like a rugby match. When you have the ball, your main goal is to sprint toward the end zone as quickly as possible, dodging defenders and looking for opportunities. But if things start to get tough, and you feel pressure from the other team, you quickly pass the ball to a teammate who might have a better shot at scoring. Traders operate in a similar way. They buy and sell stocks rapidly, trying to catch those small price changes. It's all about making quick decisions, staying alert, and reacting fast, just like those split-second passes on the field. Now, let's look at investing. Picture planting a garden. You put in seeds, water them, and patiently wait for them to sprout and grow. Investing is about buying assets, like stocks, and holding onto them for a long time, allowing them to increase in value over the years. Instead of rushing into decisions, investors focus on the bigger picture, nurturing their investments like a garden and enjoying the steady growth that comes with time. Now let's talk about the risks and rewards that come with trading and investing, using our rugby and gardening examples. When you're playing rugby, every moment counts. You need to make quick decisions while feeling the pressure from the opposing team. In those intense seconds, there's always a risk of losing the ball, which means trading comes with a higher level of stress and uncertainty. Traders need to actively monitor the market, make frequent adjustments, and often rely on technical analysis and precise timing. If things go wrong, you could lose your entire investment in just a heartbeat. On the other hand, investing is like tending to a garden. You plant your seeds and can take your time, maybe even humming a tune while you work. There's much less pressure compared to a rugby match. While gardening has its own risks, like pesky insects or diseases that can affect your plants, you can spot these problems early and take preventive measures. So, investing generally has lower risk than trading. Now, let's think about the potential gains. Winning an international rugby match might reward you with flashy cars and huge prizes, instant gratification. But in gardening, if you've successfully grown mango trees, you'll get a nice crop of mangoes, but not much else. While you can enjoy those mangoes, we can't even make furniture from mango wood. So there's no big reward like in rugby. If you can handle more pressure, more risk, and the chance of losing your entire capital in a single trade, trading might be the way to go for those high-stakes rewards. But remember, the thrill comes with significant challenges. In contrast, investing may not offer those immediate high rewards, but it's generally safer and requires less active management. It often involves fundamental analysis and research into companies. After a few years, you can savor the fruits of your labor and see your investment grow steadily. We've explored both sides of the story, so let's take a moment to summarize everything before we wrap up this video. In summary, trading is like an adrenaline-fueled rugby match with high risks and potential for big rewards, while investing is a calmer, patient gardening approach, offering steady growth with lower risks. To break it down simply, time horizon. Trading is short-term, while investing is long-term. Risk tolerance. Trading involves higher risk, while investing is generally less risky. Active involvement. Trading requires more active management, while investing can be more passive. Goal. Trading focuses on short-term profits, while investing focuses on long-term wealth accumulation. By understanding your risk tolerance, you can confidently choose the best strategy for your financial future. If this video helped you, congratulations! You're building a strong foundation in finance. Be sure to like the video and subscribe for more valuable content. And comment below, are you trading, investing, or still figuring it out? I'd love to hear your thoughts. Thank you.